Aloha everyone, Joshua Hayes at BigWaveTrading.com. My apologies for not being able to make a video lesson this past Wednesday. I did make one for members, but there was so much actionable information that I felt it would be a disservice to them to post it publicly to YouTube, considering how inexpensive an annual membership to my website is. My service is a service I would have killed for. Somebody telling me the trades before they even take the trades the next day, with the success rate that I have, with the pain to gain ratio that I have, it's just a service I would have died for in my earlier years. So I just felt that I couldn't make one. But we're back on the weekend. I'm going to keep this video lesson very short since it is Super Bowl Sunday. I want to thank you all for watching this video lesson. We're going to basically focus on the SPY and IWM QQQ DIA because the overall markets was important. I'll review the last two public trade ideas that I've given out, and I also do have one new long signal, which is really a leveraged ETF inverse play on the NASDAQ, and we'll go over that at the end of the video lesson. But do me a big favor. If you're enjoying these videos, can you do me a huge favor, everyone? Hit that like button. Give me a thumbs up, subscribe, ring the bell, leave a comment. If there's anything you want to go over in future video lessons, please let me know or tell me that you enjoy the video lesson. If you have any questions, let me know. I also plan on starting eventually in time, once I get a new microphone. I'm using a headset right now. I want to start doing some YouTube live events. So let me know if that's a good idea, and we'll go ahead and do that. So first off, let's focus on the SPY here. I know that a lot of people are very nervous short term and are getting pretty bearish on the market, and there is reasons. Now, I've always told you guys, I'm never going to be bearish on the stock market until we're below the 200-day moving average. Only then do I start thinking about shorting stocks. Now, I'll play a downtrend. This entire period in 2018, it was all put SPY puts, unwinders, gap and crappers intraday. But for now, what we have is a normal pullback. The 9 is still above the 21. It probably won't stay like that. But on the SPY, we are here at the 50 simple moving average. We'll see if that acts as support on the daily. If not, we have the 100 and 200. But for now, all the important moving averages are stacked on top of each other, so there's no reason to get bearish just yet. But I like to take the weight of the evidence across the board. So if we look at the SPY here, yeah, we're at key support levels, but short term, I'm not going to explain what this is, but it's an indicator that a member has created. I understand how he's created and what it is. I refuse to give it out publicly because it is his. But the bottom line is we've had green dots the vast majority of the way up. We had a few red dots, but notice the sustainability of the red dots. Notice the price action below the 9 and 21 here compared to even how we reacted back here. Excuse me. So we have that going against us. We also have a heavier above average volume sell-off in the short term. And this is basically just the momentum line on the TTM squeeze indicator. But you can see momentum is waning. It is moving down. At the same time, I like to use a weight of the evidence. So short term, we look bearish on the SPY, right? But on a weekly, momentum is still trending up, and we only have one recent red dot, so there's nothing concerning here. And then I always like to look at the monthly chart, and the monthly chart, we got momentum, looks fine, and we got green dots. So it looks good so far on the SPY. So now let's reverse engineer our way back on the SPY using all these indicators. Now, I know it looks like indicator overload, but remember, we just want to take a quick snapshot, see where everything is at, and then move forward from there. So if we look on a monthly basis, the most important line, well, second most important line, MACD, bullish. RSI is still bullish. Stochastic, short term, it's rolling over, but the slow signal line is so far still in an uptrend. The price percent oscillator, it's hard to see down here, but it's moving up, and the histogram is moving up. But the biggest problem and the biggest like what's wrong with this market has been this negative TSV that I keep talking about over and over and over, because like I said, I've never seen a sustained uptrend for as long as we've had with this indicator bearish the entire time, and it looks like it's getting worse, but we're still above the zero line overall. So when the indicator looks like this, look at the PPO, look at the stochastics, look at the RSI and MACD. This is your sweet spot right here. Whenever you have things that are kind of lined up like this, it's not perfect, but it's still pretty damn good. 2017, 2018, that's your sweet spot. Look at 2013 to 14. This one's kind of, but still above the overbought line, which is actually bullish. You have the TSV in a bullish uptrend here after it crosses, and you have the PPO uptrending. That's when great things can happen. So it's really odd to see the TSV negative there. But on a weekly basis on the SPY, looks good, looks good. This is concerning. This is starting to get a little concerning. This still looks good, but we're above the zero line on all the important oscillators. But in the most shortest of short terms, not good, not good, not good, not good, not good, not good. So on the shortest of shortest term, not good. On a weekly basis, still looking all right, but we have some mixed indicators kind of telling us it should be choppy. And monthly time frame, it's good, but with this TSV negative, I'm still left kind of scratching my chin and just like, what is up with this? Do we need another big pullback? And then on the next move up, hopefully the volume will start to come in on the up months, up weeks, up days, and curl that indicator higher, and then everything will be lined up? Or is TSV telling a story that the rest of these indicators aren't? I'm not sure. I would think that with all the other ones being bullish, we are fine longer term. Intermediate term, we can be choppy, but short term, all of these say, be very, very, very careful moving forward. Doesn't mean be bearish, just means be very, very, very careful. And if we look at the QQQ, now that we've spent time with SPY, we can kind of run through the rest of these. QQQ, you know, we still have that 9 above the 21, but it's getting a little rocky here. But you'll notice we have those red dots showing up just like we had here. But notice the price action the last time we had the red dots compared to now doesn't look as good. The heavier volume selling off. I mean, it got heavy here, but it's clearly more heavy here. And our momentum line is moving lower. Then whenever we go to these other oscillators, we're negative here, bearish, 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 bearish. So we've got reasons that we need to be careful. If we switch the DIA, we've got, let's go back to the other tab really quick. You know, this one looks a little bit worse. We're now below the 50 here. The 9 has crossed the 21 lower. We have a lot of red dots firing, and our momentum line is bearish. And then you add all this distribution, that is not good. Weekly, still look all right. Monthly still all look all right. But on the most shortest of short term, we do not look good. And if we look at the daily chart here with the DIA, bearish, 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 bearish. So short term, there's no reason to step in front of the selling. Wait for a low to develop, and then we can look at the long side. IWM is the worst of them all. 9 has been below, or excuse me, let's go to this other tab. 9 has been below the 21 now for a few days. We're well below the 50-day moving average, and after after selling off below the 50-day simple moving average, we have failed to reclaim the 9 and 21, have rolled back over with heavier volume. We're actually coming out of a squeeze, and it's fired bearish. Momentum line is negative. We have multiple red dots, and we have some pretty heavy volume. And on a weekly, momentum is waning. It's not bad, but it's waning. And we have 2 red dots. But monthly, longer term, we're in a squeeze. We're firing higher. Doesn't look that bad. But all that being said, we'll go back and we'll look at the monthly on these oscillators. Still, it's curling, not too bullish. Doesn't look great. Doesn't look great. Doesn't look great. I like that turn, but the lead line is still below the signal line, so it's not quite there yet. Weekly, though, we look a bit better, but look at these oscillators. There looks like that wants to cross bearish, 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 barely hanging on. And this looks like it wants to cross bearish, bearish. Haha, say that 8 times fast. And then also the histogram looks like it's going negative. And then on a daily, like I said, this is the worst of them all. It's already been downtrending from here. Whenever we had higher highs here, the RSI or MACD was much lower. RSI line was lower. Stochastics was lower. TSV was lower. PPO was lower. Now we're rolling over on heavier volume. MACD bearish, 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 bearish. So we need to keep an open mind moving forward here. Longer term, I would think we're going to find a low and rally over the next few months to years, unless the Fed really messes up things. On a weekly basis, expect some chop. Short term, things don't look good. So just keep that in mind as we move forward. All right, so I want to go ahead and wrap this video up, but let's go ahead and review the TVIX, then the TW, and then we'll go over the new long signal for Monday session. All right, so I believe it wasn't last Wednesday, but the Wednesday before, the public long signal I gave everyone was an inverse leveraged ETF play with the VIX and TVIX. I said the trade was good, up and through 40.58, triggering my stop at 40.59 and my limit at 40.59. Perfect price or no price? This allows me to limit my losses if and when I am wrong, and also allows me to best plan to take my profits on the way up without any slippage. You can work with offsets if you want. You could always do a stop at 40.59, limit 40.65. It's up to you. I just tell you exactly what I'm going to do. And if you want, you can mirror me. You can even front run me if you're a subscriber, because you get the watch list before I enter the orders in my trader workstation at Interactive Brokers. So TVIX was the trade, 40.59. The very next day, with hedges actually, I forgot to mention that, I actually allowed them to fill back on the way down because I want to get them. And a lot of times when I get hedge signals lately, they do just gap and run without me. So I don't mind getting them on the pullback. That's what happened with TVIX. The very next day, TVIX explodes higher, and we've been off to the races since. And I want to let you know what's happened since getting along TVIX. In 1, 2, 3, 4, 5, 6, 7 sessions, 40% gain. Public, free signal given to everyone that watched the video lesson. If you took the trade in 7 days, you're up 40%. You have your own choice to take profits if you want. With hedges, I just let them go. My personal first profit target would be 81.80. Then after that, we're looking at the 200-day moving average area. And then after that, which it'll never get to, 174. I mean, the market's going to have to break wide open. But here's what I am doing now with my trailing stops. I'm going to have a profit stop here. I'm going to have a profit stop here. Going to probably have a sell stop here and then a final sell stop here. So I can give it room to work. If I just do a third and then a final third here, if it pulls back normally and knocks me out of 2/3, I'll really hate myself. So that's why I'm doing 1, 2, 3, 4 stops on TVIX. Good to cancel sell stop orders. So for instance, for this one here, the low day is 48.30. My low day would be 48.29. Then the very next public long signal I gave was TW. I actually gave that long signal out last weekend. Told you what the game plan was. Told you what it would need to do also to fail the trade to fail. It would have to close below 44.34 on above average volume while losing green BOP. Came close here. Look at where it closed. 44.35. Very close, right? Heavier volume, right? Still has green BOP. The trade, the signal has not failed. Still has not failed. 44.11. Why? A pullback on below average volume, and my balance of power indicator actually increased. Still holding the 200-day moving average. The signal has not failed. Nice day on Thursday. And on Friday, bam, triggered and filled on my end. Posted it in the chat room exactly the moment it happened. 45.23, obviously, is where the fill was. Once I got filled, do you notice what it did, though, on Friday? What did it lose? Green balance of power. That immediately causes me to get defensive. So now, 50% of my stops is 1 cent below Friday's low a day, 44.57. So my first stop is at 44.56. And for now, my final stop is at 44.01. So if I got filled at 45.23, my final stop is at 44.01. About how much did I just risk on that trade? A little over 2%. Not too shabby whatsoever. And so now that takes us, and currently the gain on the stock is obviously 2.74%, almost 3%. You can take some profits here. I currently have one and only good to cancel sell limit order at 50.48. And if it gets up to there, I'll get out a half, and then the rest of the half is allowed to run until there's a big reversal candle, something similar to a price bar like that. So now that leads us to our only new public long position. Some people come to my website, they take the 2-week free trial, and they're like, oh my God, it's overwhelming. I don't get that. I give you guys the best of the best. I lay it out. It takes me hours and hours and hours to update the site on an end-of-day basis. And I got to be honest, I don't have enough members where it's really worth doing it, but I do it anyway because I love you guys and I just do it for the love of the market. But the bottom line is, I have a lot of signals. I had a lot of signals up into the last 2 weeks because of the overall market. The overall market isn't proper. I'm getting a ton of reward to risk signals, and I'm throwing darts out there. That being said, even if I have 10 signals, I tell you every evening which ones are my priority signals, which ones you should focus on, but to do your own due diligence and check through the rest of them. See if they're the signals that I don't say that I don't care about. You might know that company. You might know something. You might understand it better than I do and see something that I don't see and decide to make that your priority. And then who knows? Maybe that's the one that moves 20% in the next week. But I tell you every evening which one is priority, which ones are most critical, most important. These are the ones to stalk and try to get as the best as you possibly can. So going into Monday, I have 3 signals, 2 are hedges. Only 1 is a long signal, and I've been stalking the stock the entire past week. And I tell everybody, if you're looking for perfect signals in a perfect market, this isn't it. We just reviewed why this is not the ideal market to be throwing 5, 10, 15, 20, 100% of your account per trade. It's just not that kind of market right now. That being said, to me, it's all about reward risk ratio. And that's why these 2 hedges and that 1 new long signal is on my list for Monday. So SQQQ is the main one that I'm focused on come Monday. Now, the ATR on Friday was larger than what it is recently. And normally, that kind of makes me want to back off. But here's my theory. It's always that reward risk ratio. If I'm looking for this thing to get to the 50-day moving average, to these recent highs, the 200-day moving average, or these recent highs, is a new long position worth it right here? Absolutely it is. So I'm going long SQQQ. I see an engulfing bullish candle over candle already in a slight uptrend, obviously because the Nasdaq's in the downtrend, on heavier above average volume with a pocket pivot point signal. During this last leg here, someone has been accumulating this hedge during that most recent trip down. I have balance of power jumping significantly from the yellow area up into the green area. So my game plan with SQQQ come Monday, good to cancel by stop at 2056, good to cancel limit at 2056. On Interactive Brokers, it's a good to cancel by stop limit. 2056 gets entered into both price columns. Then you can add a conditional ticket with it. One triggers the other orders, OTOs. I normally wait for them to fill and then call them back on, but you know what? I tell you what, I can't day trade and handle these positions on end of day signal. I lose focus. So I'm going to have to start using OTOs even with my end of day signals. Normally I wait, I get an alert that they filled, I go back in, and then I put in my stops. I'm going to start setting them up with the trade idea. So I'll initially have a good to cancel buy stop limit order at 2056. That will come attached with a stop order at 1916 for 50. So if I'm going for 100 shares, 50 shares at 1916, and then 50 shares at 1863. Those will be my two good to cancel sell stop levels. Unbelievable. This video still went 20 minutes long. God, I love this stuff way too much, guys. All right. If you made it through the entire video, do me a favor. Please hit that like button. Please ring the bell or subscribe. I greatly appreciate it. I would really like to grow this YouTube channel. I don't know how to do that on my end. I might have a background in science and math, but I'm actually not that educated because of where I grew up and the conditions that my life, I don't even want to talk about it. Let's just go ahead and wrap this video lesson up, everybody. Bottom line is, just do me a favor. Hit that like button. I'd greatly appreciate it, especially if you made money on that TVIX and TW trade. All right, everyone. I'll see you on Wednesday. Aloha.